Okay, this is Club Accounts from the 2011 paper, question 6. So this is the longer version of Club Accounts. It's got a statement of opening accumulated capital or accumulated fund, which is the capital of a club, income expenditure, trading account, and then a balance sheet. So on the left here, we've got the laid out blank document. So you do get marks for the headings here. So it's the statement of accumulated fund of the Glen Tennis Club. And it's at what date? It's at the 1st of the 1st, 2010. So income expenditure, we laid out the same. For year ended, so this is going to be for the 31st of the 12th, 2010. So we have a bar trading account, and then we'll have a balance sheet. And that will be after the 31st of the 12th, 2010. So we have the blank documents here on our left. Spend a few minutes making sure that they're laid out properly. And then starting at the beginning, and we work through trying to put the information into the right places. And as we've done in previous questions, we're not going to add up and do our maths, unless we have to. So this information here is all relevant to the opening situation. We'll do this first, and then we'll look and see if there's anything else that's relevant to the opening situation, i.e. relevant to last year or previous years. So we have Clubhouse. So it's 250. Equipment. So it says equipment at cost 75 grand. So I'm assuming that there's been no accumulated depreciation on this. So 15 grand for bar stock. Bar debtors 1280. Bar creditors 8400 will be a liability. Life membership 24 grand. So just so we understand, that means that people have paid us a large amount of money so that they can be members for life. So that's a liability of the club, because we will owe them service. We're not going to give them the money back. We'll owe them service for a long number of years. So that's why it's a liability. And now the levy reserve fund. And just so we understand the difference. Life membership is where we give people the chance to buy a membership for life, but they choose to do it or not. In terms of football, this would be a season ticket. So you might be able to buy a ticket that will give you free seats for 10 years, and that will be used to pay for expanding a stadium. A tennis club would be doing something similar. Levy reserve is where the club has got into trouble and everyone has to pay an amount of money. You don't have a choice in this. Life membership, you can choose to do this. And why is this levy reserve a liability? It's because the money that these people pay, it's like the capital of the club. They've put more money into it, and the club technically owes that service, that money back to those people, even though they won't actually ever get it back. Now back to here, we have wages prepaid of 400. That would be an asset. And we have subs due 500. That's money owing to us. Okay, and then we also then look over here and see what information here is relevant to the beginning. So you'll always have the bank current account, so that's money we have. It's on the debit side, so it means it's an asset. And I don't see anything else that's relevant from before. Repayment of a 30 grand loan. So that's going to be a liability. So the loan is 30 grand. And then we'll need to work out what's the story with the interest on the loan, because we normally would have interest due. So the interest is 30 grand taken away from 33960. So the interest is 33960, and that's for 15 months. Okay, so some of it is going to be due at the beginning of the year, and some of it that is going to be an expense. So we look at the date we paid it. So we paid on the 30th of the 9th with 15 months interest. That means 9 months is going to be an expense of this year, so that's 9/15ths. And the remaining 9 from 15 is 6, so 6/15ths is going to be due at the beginning of the year. So it's the total, so the interest, no mistake there, the interest is 3960. So it's going to be 3960 multiplied by, now the due at the beginning, because we paid it on the 30th of the 9th, we would have owed 6 months interest, so 6/15ths. And then the difference, which is the 9/15ths, is going to be the expense for this year. Okay, so the amount due is, and then the expense, I might as well just take that now, and I'll put that in here as an expenditure. Okay, then I go back to looking here. Is there anything else that's relevant for the beginning of the year? Now it says interest from 4% investments. I don't see any investments mentioned up here, so that means I must have another asset called investments. Now the interest is 4%. That's what we received. Just checked it. Was there any more interest that should have been received? Yes, there was an interest due of 500. So the total interest should have been 2 grand. So I'll put that in here. So we should have received 2 grand. Now that 2 grand represents 4%. So if I divide my 2 grand to find out what my original investment was, divide that by 4 and multiply by 100. So divide by 4 and then multiply by 100. That will give me the original value of my investment. So my investment was 50 grand. Now, nothing else here. So bar stocks, that's the end of this year. Depreciation, no, that's all to the end of the year we're dealing with. Nothing else for the beginning. So subs include, is anything to do with previous years? Levy, that's for 2010. There's a levy for last year, so these people owe us money. So that's I'm going to put that in as another circular row. So we have a levy due, and the amount of money is 100 for 8 members for last year, so that's €800. Okay. And investment into life membership written off. So we'll deal with that as we go through the year. Okay. So we're not going to do the adding up or subtracting just yet. We move down to our incomes in the income expenditure account. Obviously, one of the incomes is going to be the bar profit. Okay. Why is that not showing up? That's because okay. Now, so the bar profit. To work out our bar profit, I come down to my bar trading account. So we start off with our bar sales. So the basic structure from junior cert. And then we we'll have opening stock. We'll have bar purchases. And then we'll have closing stock. Now, there was debtors and creditors mentioned, so therefore the bar sales, which is actually the bar receipts, some of those receipts might have been to pay off stuff from last year. So that means that opening debtors, debtors that we had at the beginning of the year, they would have been paid during this year, but they're not relevant to this year, they're relevant to last year, so we take them out. So we take out opening debtors, and then we'll add our closing debtors. And the same thing will apply to our purchases. So we'll take away our opening creditors, and we'll add our closing creditors. Now remember, these closing creditors are people that we owe money for. We bought the stuff and we haven't paid them yet, so therefore that's why we're adding it on to our purchases. So our bar receipts is 74 grand. The opening debtors at the top of the question, 1280. And that's going to be a minus. The closing debtors is 300. So we add those three together. The opening stock, bar stock is 15 grand. Bar purchases is 38.5. At the beginning we had a bar creditors of 84, and at the end the bar creditors is 86. So that's the goods available. Now closing stock is what's left over, so 13.3. So that means our bar profit is that. So 32,690. So I put that there with our incomes. So if we go through the rest of it, interest from the investments, we've dealt with that. Bar receipts, we've dealt with catering receipts, and then there's catering costs. So we notice the costs were more than receipts, so we'll have catering loss. It is okay to put catering receipts here and catering costs here. There's no problem doing that, but I just find it's easier to put the two of them together. So there's a loss in this case, which is 15,800 expenditures. Take away the receipts of 12,700. Subs, 84 grand. Now obviously there's lots of adjustments of the subs down here, and we need to check what subs we had at the beginning. So what I might do that, I'll just do this as a note. So we have subs was 84 grand. We look at the beginning and we see there's a subs due 500. That's nothing to do with the current year. That was due for last year, so we take that out. So opening due is minus 500. And then down here we've got life memberships were included with subs. So just so we understand, life memberships are going to be in the finance buy at the end of our balance sheet. And we have current life membership up here of 24 grand. So 2 life memberships were paid, bringing the total to 10. That means this total of 24 grand was 8. That means each person was paying 3 grand each. So we would have received 6, we'll take that out. So that was included in our subs, shouldn't have been. Okay, so that 6 grand is going to be added on to our life membership. So I'll do that while I'm at it here. So I'll go down to the end of my balance sheet. and I'll have life membership. So life membership was 24 grand at the beginning, and then there was another 6 grand, so life membership is a total of 30 now. And down here it said the life membership were written off over a 5-year period commencing in 2010. So 30 divided by 5 is 6. So we're taking 6 away, so life membership is 24 grand. And then now, what do we do with the write-off? Might as well, while I'm dealing with the life membership, I'll deal with that issue. So if it was an asset and I was writing it off, then that would be an expense. The write-off would be an expense. Here we have a liability that I'm writing off, so that's actually an income, the opposite of the expense. So I'll put that in here. And that's 6 grand. Now, back to my subs. Subs for 2011 went to €300, so that's a prepaid for next year, not relevant to this year. So that's prepaid at the end of the year, so that's not relevant this year, taken out, and I'm just going to put that in while I deal with it in as a current asset. Okay, there's a levy of 2010 of 100 each on 200 members, and there was some owed from last year. So the levy owed from last year we've already dealt with above, but it would have been included in the incomes for last year, or sorry, the money that we would have expected for last year, and would have been included in the opening levy reserve fund of 20 grand. So we just need to add on to levy reserve fund 20 grand. We need to add on this year's, so it's 100 each, 200 members, so that means 20 grand. Current figure is 20 grand, so that goes up to 40 grand. So, sorry, that should be 40. So remember, the levy reserve, just to go through it again, levy reserve was 20 grand at the beginning. And then plus we got another 20 grand, 100 multiplied by 200 members, that's for this year. And there was levy for members from last year that hadn't been paid. That goes into the opening accumulated fund, but that would have been included in the finance by the opening finance buy of 20 grand. We would have already had that, because we would have expected to get that. We would have sent out bills for that. So at that stage we would have charged it, even though the cash never actually came in. Okay. So that is our subs. Just quickly checking. So we've got our prepaid, then we'll have our levy for 2010. That was included, so they need to take that out. So that's 20 grand. And then there was 800, which was nothing to do with this year as last year. Okay, so we add that together. So it's our opening subs with all of our adjustments, which all happen to be minus, and we get that figure there. Okay. Annual sponsorship, 7.5 grand. It goes in as an income because it's a regular figure we get all the time. Sale of equipment, now it cost 4 grand. We sold it for 2.5 grand. That means, and there was no accumulated depreciation on it. So that means we sold it at a €1,500 loss. So I'm going to put that in as, oh, I put sponsorship, I just realized in the wrong place. That should be in the incomes. So we're going to have a loss that we'll put in there. I'll put our sponsorship back where it should have been. Okay. Now, bar purchase we've dealt with. Sundry expenses, 24 grand. Now that's kind of general, all other expenses. I'm just going to squeeze a couple of extra lines in here to put some of those in. So Now sundry expenses is 24 grand, and I just want to see if there are any other expenses prepaid or due. So at the beginning there was a wages prepaid of 400. Now that means including my 24 grand would have been 400 that was prepaid for this year. We paid it last year. It's included. It's to do with this year's expenses, so we add it on. And then we look at the end. Are there any other things due at the end? Investment interest due? No. Okay, so there's only that. Equipment is a fixed asset, but there might be depreciation on it. Clubhouse depreciation. Equipment owned at the end of the year depreciated at 25% of cost. So the equipment was worth 70 grand at the beginning. 75 grand. I got rid of equipment that originally cost me 4, so I had 71, and I bought 8, so that's 79. So the depreciation is 79 times 25%. Okay, and then we have to do depreciation of our clubhouse, and that's that. Yeah. Oh, I put my subs in the wrong place as well. So, clubhouse at the beginning was 250 grand. I didn't spend any money buying new clubhouse, so it's still 250 grand. We're depreciating by 2%, which is 0.02. Okay, just making sure I've dealt with all of those. I've dealt with investment income and life membership write-off. We put that up there. Investment income is there as well. Okay, so we just have 2 other expenses that go in. No adjustments needed. So the coaching lessons was 3.5, and the travel expenses was 10 grand. Now, I've dealt with equipment, everything else. Now, prize bonds, just so we understand, prize bond is a saving scheme where you can, if you got spare cash, you put it into this new type of bank account. It's an investment bank account. You get interest on it, and they have prizes that are awarded every year. So it's a different type of bank account, and you have access to the money whenever you want. So we treat it as a current asset in our balance sheet. So I'll put that straight in. So that's 4.4. Now, you could, it depends on the attitude of the club. If the club is saving for something long term, we might put that prize bond as a fixed asset, and in financial fixed asset. But because of the relatively small amount of money, I'm assuming that this money has been saved short term. That's why I'm putting it into the current assets. It's a use of spare cash. Okay, so balance sheet then we have clubhouse, 250 grand. Then we had depreciation on the clubhouse up here somewhere, 5 grand. And then we had equipment. And we said equipment is worth 79 grand. We got rid of something that originally it was 75. We got rid of something over here that originally cost 4 and replaced with something now costs 8. So we add a net figure of 4 grand on. And then our depreciation is there. We might as well take these away. And we know that we have an investment, and the investment we worked out in our opening accumulated fund was 50 grand. Okay, so current assets will have bar stock is 13.3. Now, any prepaids or dues at the end, equipment of depreciated, bar debtors. So we bar debtors. And bar debtors is 300. And then bar creditors is 886. Just check that, yeah, it's 86. We have subs for 2011, so people have paid in advance. That's a liability. That's 300. Because the club owes that money back to those members, or owes a service back to the members. Investment income. Okay, this investment income is due. It's money that's owing to us. And that's 500. And then we also have the balance at the bank. So that's the balance CD at the end of the bank account. So when I bring that down here as a balance BD, it's going to be the debit side, which means we have money in the bank. So that's another current asset. And it's 45,180. Okay, that's that. So now I go through and I'll just do my maths. But at this stage, to be honest, you've got 95% of the marks. And if you don't have time in the exam, I would leave the question at this, because this is where you got most of the marks. But I'll finish anyway just to see, did I actually get it right? Or did I make mistakes along the way? Remember, I've done it very quickly and I've been entering into a number of different things at the same time. So there's a real possibility that I would have made mistakes. I would have maybe left things out, but I've got the vast majority of the marks. Now, so writing up our liabilities. No. So there's the opening accumulated fund. And that opening accumulated fund goes into the balance sheet, so that's D24. We've already got our profits, so we just need to add up all of our incomes. We have all of our expenditures. And that's our surplus. And that's D46, so we're going to put that down in our balance sheet. So we can add up our balance sheet. And we add up this here. So add up our current assets. We take those away, and that gives us our working capital. Okay, so at this stage we see that I'm out by €300. So what I would do is just literally spend 2 minutes to see, is there €300 mentioned in the question. So we had subs prepaid 300, and I had put the subs prepaid in there. but there was another 300 that I remember somewhere earlier on in the question. Was it interest or something? We had bar debtors as 300 as well. Yeah, I can't remember. So at this stage, we know we're out by 300. We have one look. Can we find it? Can't spot it straight off. We leave it. We move on. Okay. I hope that makes sense.